Traders Network with Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. Up next is Nick Santiago, President and CEO of In the Money Stocks. Nick, thanks for coming back to the show.
Always great to be with you, Michael. Thank you for having me.
Oh, my pleasure. All right, before we get into gold and the rest of these things, Nevada's got a quick question for you. How far do you think that the S&P would go for the summer low?
Well, it's a little bit tricky right now, but as I said, we're going to come down and we're going to make these gradual lower lows and higher and also lower highs. So it's a little bit tough to say, but ultimately I do think we have a chance to go a lot lower before it's all said and done. Don't think there won't be rallies in here. There will be some rallies in here. Right now the markets are at a real vulnerable position to go lower. However, you're going to get these surprise bounces, whether it's European news, it'll last, maybe 3 days, 5 days, but then after that, it's just going to lead to more selling opportunities. And this is really a trader's market for the most part.
I've had some guys on the show recently thinking that maybe the S&Ps could get all the way to 1,000. What do you think? Think that's a possibility?
Absolutely.
Okay.
I would not rule that out. Right now, if you just go back and you look at where we were last year in October, I mean, we tested basically the S&P cash went down to 1075. So, to see that level test again and even breached would not be a shock at all to me.
All right, that sounds good. We'd have to bone up on our timing so people can get into your trading room and watch you pull the trigger on that one.
Absolutely.
All right, let's go to the gold market. GLD is what you wanted to talk about, right?
Yeah, I wanted to talk a little bit about GLD. Today you're getting a little bit of an uptick, but I've been on your show for a while now, and I've been, I'm a guy that owns a fair amount of bullion, both gold and silver bullion. I own coins, but I have not been bullish on gold throughout this year. But as I just want to reiterate to a lot of people, because I even see it with my own members, how itchy they get to get into gold and silver so quickly. These things go through corrective phases, and if you just look at a monthly chart of gold, what you're going to see is that there's been periods where gold hasn't really performed all that well. You just go back to 2008 when the markets deflated in March 2008. Gold deflated with the market. What gold is signaling to us right now is that the market, even though we have all this Operation Twist and quantitative easing going on, whether it's in England, Japan, and even here in the United States, it's telling you that we're going through a deflationary trend right now. And all gold is doing is just making another long-term consolidation pattern, which is, somewhat of a corrective move. And then you're going to have another big springboard effect in gold. So I have a hard time thinking that the gold move is done. I believe this fall, maybe in the fourth quarter of this year, you're going to get a real good buying opportunity for gold. And I just wanted to reiterate that because I probably get more emails about that than anything else.
Okay, let's go. Let's think about being out there in the fourth quarter of this year. I've had some people come on the show and tell me that they're thinking this gold market could give us a wonderful buying opportunity somewhere down there around the $1,200 level about that time. I wanted to see what your thoughts are on that.
Well, 1,200 is a little bit of a stretch. I don't rule it out. I don't rule anything out because, when gold falls, it can really fall sharply. And that brings you to 1,200 level on gold, brings you down to around the 50-day moving average on the monthly chart. So, you can't rule out anything at this stage of the game. Right now, let's test the 1,500 level first, and then, we could talk about, potentially going lower. 1,500 in my book is going to be a pretty significant area in the short run. But it's always possible. If that dollar surges, say the dollar goes up to $89, maybe $90 on the U.S. dollar index, there's nothing to say that gold can't go down to, say, 1,200 or maybe even 1,100. There's nothing to say that can't happen.
Okay, we can get to the dollar later. I think you wanted to cover the USO.
I did want to cover the USO because we've had a pretty steep fall in oil. And as I mentioned on your show in the past, what I said was, when the market starts to drop, oil is going to drop with it. Everything is inflation and deflation. We essentially don't even trade stocks anymore. We really just trade inflation. How much inflation can the central bankers put in the marketplace, and we buy the market up. And then once the central bankers take that, get hit with deflation, and they don't have enough stimulus in there, everything deflates. And one thing I always find interesting is that the president talks about these oil task force and gasoline task force. If you want to get the price of gasoline and oil down, simply stop devaluing the U.S. dollar. If you do that, gasoline and oil will both go down. But right now, oil falling is signaling to us that we're in a deflationary period at this moment.
Okay, and we've got through the oil, we got through the gold, we're talking about that deflationary process and the dollar. Do you see this going to a particular cycle point where we're going to reach critical mass and find a pivot?
On the dollar?
Deflation, and we can bring the dollar in with it.
Okay, well, I think that we're going to we already started the deflationary trend already.
Right.
I think that has begun in early April, late March. That was when we were looking for a turn in this market. It has happened. It has begun. And, what we're going to have to look for now is just to be a trader and catch these big rallies when they happen, because you're going to get big rallies. But ultimately, I think we're headed lower into the end of the year.
Okay, well, that's it. Then we've got what is being formed and defined as a clear trend to trade, and you just gave us a timing model, fourth quarter, near the end of the year, for us to be able to sell into strength on this process.
Yeah, you can short every bounce right now. I mean, maybe with the exception in the middle of the year we'll get a multi-week rally, but that's going to be about it. I mean, I don't. The problems here in this world are so massive. I mean, there's only so much debt can bail out debt, and that's what's going on.
I agree with you. We'll get on to fundamentals later. Let me move to the next market you wanted to cover, J.P. Morgan.
Yeah, last week or even 2 weeks ago, I was on your show, and I said, watch J.P. Morgan trade down into the 41 level, maybe even pierce it or so, and that's where the stock will find support. So far, yesterday, JPM, I think when I said that, JPM was around 44. So
that's right. Nice trade.
Yeah, it was good. And like I said to your members, I said, you don't even have to trade it. Just watch it, but just know that JPM is signaling that the market's going lower. And this is what we need to watch for. This stock still, it even blows my mind away sometimes because it's such a good market barometer right now. And now JPM is sitting at a little bit of a support level around 41. We'll see how it reacts here. But if this thing makes bearish consolidation, that's going to give us all a heads up that the market's going to make another nosedive lower. And that's what you have to watch for on this stock, because it really is just that good of a market barometer right now.
Well, the 200-period moving average is at 36 on a daily chart. Do you think that this thing could really get into that danger zone?
Oh, yeah. I think it's eventually going to get there. In fact, I think it's probably, by the time this is all said and done, could test 26, 27. I mean, there's nothing to say it can't get down there. I mean, there are going to be bounces in between here, but I mean, this stock went parabolic after they announced the dividend that they really can't afford to pay. I mean, so it's you just have to. That's why we have to use charts. But overall, there's nothing good here. At least I don't see it right now.
Okay, JJC.
Okay, JJC is copper. It's getting a little bit of a bounce today. This is one that I've been emphatic about, and I've told your listeners time and time again, every bounce you could sell into. This is another one where the cycle is down until the later in the year. And again, if this thing moves up for 4, 5, 6 days, 7 days, 8 days, sell right into it. Any resistance up there, sell into it. Copper is going lower.
Got it. All right, you do a great job. Give us a web address so these guys can get in that trade room with you.
Sure. Come on over to InTheMoneyStocks.com, and if you have any questions, please shoot us an email at support@InTheMoneyStocks. Give us a call. We'll be happy to answer any questions. We offer a 7-day free trial to our chat room, also to our nightly swing trading setups in our research center. You'll get all of our videos and everything else that we put out, tons of content. Come on by.
Got a webinar coming up anytime soon?
We have a webinar on Saturday, I believe the 19th of this month. We're going to have an intensive In the Money Stocks methodology webinar. You'll learn all about my cycles. You'll learn about my proprietary mathematical time counts. There's just so much in there. It's about a 7-8 hour boot camp. Come on by, give it a try. You'll never look at the markets twice again the same way.
Yeah, and you'll learn how to hit the bullseye on these trades. Thanks, Nick.
You're welcome, Michael. Thank you for having me.
My pleasure. All right, everybody. Nick Santiago, President and CEO of InTheMoneyStocks.com. Watch this guy trade. You'll be amazed.